One of the hardest and most overlooked aspects of trading is not the strategy, but the psychology. It doesn't matter how much technical analysis you know or how perfect your trading plan is. If you can't manage your emotions, your success will be limited. In this video, we'll walk you through the most important elements of trading psychology and how to develop emotional discipline in order to win consistently. Why emotions are your enemy in trading. How to recognize and control emotional triggers. Building mental resilience and confidence. How to make smarter, more objective decisions, and how to avoid the most common emotional pitfalls. Why psychology is the #1 factor in your success. If you're serious about becoming a consistently profitable trader, you need to understand this. Your mind is your biggest asset, or your biggest liability. When you're losing, it's easy to get caught up in fear and start making emotional decisions. When you're winning, you might get overconfident and start making greedy choices. The key is to recognize your emotional triggers and control them before they control you. In fact, many of the most successful traders say that controlling emotions is the biggest factor that separates them from the rest. The emotional roller coaster of trading. Every trader goes through a cycle of emotions. Excitement. You see a winning trade and get that adrenaline rush. Greed. You start thinking, I can make more money if I hold a bit longer. Fear. The market moves against you and you start doubting your decision. Regret. You either held too long or sold too soon. Hope. You tell yourself the next trade will be better. It's a mental loop that most traders get stuck in. The trick is to break the loop by developing mental resilience. The first step in controlling your emotions is recognizing your triggers. Emotions like fear, greed, and overconfidence can cause you to act impulsively. You might enter a trade without your usual plan, hold longer than you should, or even revenge trade after a loss. Here's how to recognize these triggers. Fear. You feel anxious about losing money, and this causes you to exit a trade early or avoid entering altogether. Fear can make you second-guess every move you make, causing you to hesitate at the wrong times. Greed can cloud your judgment, making you hold on for too long or enter more trades than you should. Overconfidence leads to careless risk-taking, ignoring your trading plan. Once you identify when and why you're getting emotional, you can begin to regulate your behavior. So, how do you take control of your emotions and become a more disciplined trader? A solid, rules-based plan is your best defense against emotional trading. Set entry, exit, and stop-loss criteria before the trade. Define how much you're willing to risk and stick to it. Don't deviate from your plan because of market noise or short-term emotions. By making objectivity your priority, you remove the emotional element from your decisions. Take breaks and avoid overtrading. If you're feeling emotional, take a step back, go for a walk or take a break. Overtrading is a huge risk when you're not mentally clear. To become a consistently successful trader, you'll need to shift your mindset. Accept that losses are part of the game. You will lose trades, and that's okay. The goal is to make more than you lose, not to win every single trade. Focus on the process, not the outcome. Rather than obsessing over profits, focus on following your plan and executing consistently. When you consistently follow a well-defined strategy, the profits will come. Trust your system. You've spent time developing your strategy. Now it's time to believe in it. Don't second-guess yourself or make last-minute changes based on emotions. Develop mental resilience. Resilience means staying calm under pressure and bouncing back after losses. Resilient traders don't give in to fear or let greed take over. Discipline isn't something you turn on during a trade. It's something you build outside of trading hours. Here are habits that reinforce strong psychological foundations. 1. Pre-market preparation. Start every day with a structured prep routine. Review your watch list, check support and resistance, understand catalysts, and set alerts. The more prepared you are, the less reactive you'll be. Limit your trade count. Decide ahead of time how many trades you'll take in a day. Fewer trades equals fewer emotional decisions equals better results. Focus on quality over quantity. Use a trade checklist. Before entering any trade, go through a simple mental or written checklist. Is this trade part of my strategy? Does the setup meet my entry criteria? Is the risk to reward ratio favorable? Do I have a clear stop loss and take profit level? This habit alone will eliminate impulsive trades and keep you focused. Revenge trading is one of the most destructive behaviors in trading. It usually happens after a loss, especially a big one. You feel angry, frustrated, and you want to make it back. So you enter a trade without proper setup, often over-leveraged and emotionally charged. The result? You double the damage. Here's how to prevent revenge trading. Pause immediately after a losing trade. Review the trade and ask yourself, did I follow my rules? If emotions are elevated, step away from the screen. Set a maximum daily loss limit and stick to it. Discipline isn't about winning every time, it's about knowing when to stop. After a winning trade, especially a big one, your brain releases dopamine. It feels amazing. You feel powerful. You feel in control. And that's when the danger begins. The trader's high often leads to overconfidence, overtrading larger than usual positions, ignoring your stop loss, chasing more gains to keep the feeling going. This is a biochemical reality, and it's one of the most dangerous emotional states for traders. The solution? Treat wins like any other trade. Log them, review them, move on. Don't celebrate in the moment. Celebrate at the end of the week if your performance followed the plan. Remember, discipline is your edge. Dopamine is your trap. How to stay calm in live trading. Trading in real time can be intense, even if you're experienced. But staying calm is what allows you to make smart decisions under pressure. Here are tips to keep you cool. 1. Use hard stops and take profits. Don't leave your exits up to emotion. Set them in your trading platform. That way, your rules get executed, even if your emotions try to talk you out of it. 2. Avoid watching every tick. If you set your plan and your stop loss and target are in place, avoid staring at every tiny price movement. Watching every tick will wear you down mentally. 3. Breath and recenter. Take deep breaths. Drink water. Keep your body relaxed. If you feel anxiety rising, it's a sign to pause and reset before acting. 4. Know that one trade doesn't define you. Trading is a long game. One trade, even one bad day, doesn't determine your future. What matters is the consistency of your discipline. The work doesn't stop after the trade. In fact, one of the best ways to develop emotional discipline is through post-trade reflection, especially after emotional trades. Ask yourself, did I follow my plan? Where did emotion affect my decision-making? How did I feel before, during, and after the trade? What will I do differently next time? This daily review builds emotional awareness, and that's the foundation of growth. Let's distill all of this into 3 essential psychological principles. 1. Emotional awareness. Know when you're emotional, don't deny it. Spot it early and intervene. 2. Self-discipline. Follow your rules, especially when you don't feel like it. 3. Resilience. Bounce back from losing trades or tough weeks without losing confidence or abandoning your edge. These are the traits that build long-term success, and they're what separate traders who survive from those who give up. Confidence in trading is critical, but it must be earned, not assumed. Confidence is the quiet assurance that you've tested your system, you understand your edge, you've trained yourself to follow your rules. It's not about believing you're always right. It's about trusting yourself to respond correctly when you're wrong. Here's how to build real confidence. 1. Backtest your strategy. Knowing it has worked over hundreds of trades builds belief. This turns fear into informed patience. Use a trade journal. Seeing your own consistency reinforces positive identity. I'm a disciplined trader. Detach your identity from outcomes. Your last trade does not define you. Your behavior over time does. Celebrate discipline, not profit. Traders who constantly focus on how much they're up or down become emotionally tethered to every tick. This creates anxiety, poor decision-making, and emotional roller coasters. Instead, reframe your mindset. See trading as a game of executing a plan. Your job is to make good decisions, not chase dollars. Profits are the byproduct of consistency. Ask yourself, if this trade had no money involved, would I still take it? If the answer is no, it's likely based on emotion, not logic. You're not here to gamble. You're here to execute a system. Even disciplined traders can suffer from emotional burnout, especially during high volatility periods, prolonged losing streaks, or overtrading cycles. Symptoms of burnout: feeling mentally exhausted after each session, dreading market open, difficulty concentrating or sticking to rules, emotional outbursts or apathy. Here's how to avoid it. 1. Take regular breaks. Step away weekly, even if you're doing well. Let your nervous system reset. 2. Limit screen time. You don't need to watch every candle all day. Focus on execution windows like market open and power hour. 3. Stay physically active. Exercise improves emotional regulation and mental clarity. 4. Review successes, not just mistakes. Track your wins and correct behavior, not just your losses. Burnout isn't a sign of weakness. It's a warning light. Don't ignore it. Add these mindset tools to your daily routine. Pre-market visualization. Take 2 minutes to visualize calmly following your plan. Mentally rehearse entries, exits, and staying disciplined. Affirmations. Repeat short phrases like, I am a disciplined trader. I follow my plan without hesitation. I let the market come to me. Post-market reflection. Review the day. Not just results, but emotional quality. Ask, did I trade with clarity and control? These rituals rewire your mind to operate from consistency instead of reactivity. Let's review the core ideas you've learned. Emotions like fear, greed, and ego sabotage trades unless you recognize them early. Discipline is built through planning, review, and repetition, not willpower alone. Confidence is earned by following a tested system, not guessing or reacting. Focus on execution, not dollars. Profits follow precision. Burnout and overtrading are signs to pause and reset. Your identity as a trader is forged in how you respond to pressure. You don't need to be perfect. You need to be consistent. That's what separates professionals from gamblers. If this video helped you build a stronger mindset, show your commitment. Like this video, subscribe to the channel, and share it with another trader who needs to hear this. We're building a community of smart, strategic traders, and your support makes a difference. Turn on notifications so you don't miss our next breakdown, and keep mastering your mental edge. This video is for educational and informational purposes only. It is not financial advice, and we are not licensed financial advisors. All trading involves risk, and you should do your own research or consult with a licensed professional before making investment decisions. Past performance does not guarantee future results.